Welcome. It's Tax Tips Tuesday with me, Christine Walters from All Inclusive Accountants on Tuesday, December 6th. So today we're going to talk a little bit about having money owing to CRA. So here's some things that you need to know when you have a big tax bill owing to the CRA. So first off, some statistics. According to the CRA, almost 15 million Canadians or people in Canada got a tax refund this last year. But about 6 million Canadians had a tax bill owing that had an average balance owing of about $6,600. So whenever clients receive a large tax bill like this, or I tell them that their taxes owing are going to be in this neighborhood or sometimes higher, they, of course, can react in a variety of ways. Some people aren't surprised. They know that being self-employed or whatnot generally results in a higher tax bill because nothing's been sent to CRA throughout the year, like when you're an employee. But the one that I hear the most often is, what can I do right now to make this amount smaller? 95% of the time when we're having that conversation and clients are asking me, what can they do right now to make that amount smaller? We are way past any of the dates where anything could actually be done to decrease those taxes. So the two key dates, obviously, are taxes run on a calendar year. So December 31st, you need to expense what you're going to expense, buy what you're going to buy before December 31st so that you can get it in as a deduction for this year's taxes, or make your donations or do your medical whatever things that you would pay for. Get those glasses, braces, whatever paid for before December 31st so you can make those claims. And then the second date, of course, has to do with the RSP contributions, which is usually March 1st of the next year. So like I said, 95% of the time we're past those dates when this conversation actually happens. So there's nothing that we can do then. All we can do is hopefully be a little bit more proactive going forward. But that being said, there are some ways that you can help minimize your overall tax situation. So first, especially if you're self-employed, but this also applies if you're just a T4 employee, if you've got a tax preparer, they should be happy to do this sort of thing for you. I do it for my clients. So first off is having an accurate income and expense projection going on throughout the year. So like I said, more specifically for those who are self-employed, but for those who are T4 employees, you could ask your accountant, send them your year-to-date pay stub in September or October and see what the damage is looking like. They can plug it into the tax program and give you an estimate of what your tax bill is owing. In fact, I have a couple of T4 employees who are religious about doing this every year. So that's the first thing. And then the second thing is being educated about taxes in general is the other key area to avoid surprises. So you should understand a little bit about how taxes work, the things that you are able to write off, RSP, childcare expenses, medical expenses, donation, interest on your student loans if they're from a provincial or Canadian government, a few other things. So that's where it's key to understand what can and can't go into your taxes and how those things affect your taxes. So for me, by proactively estimating, I work with my clients throughout the year. We proactively estimate what their combined personal and or corporate income tax and expenses are going to be so that we can help them minimize their overall taxes as well as create a budget for saving to pay for those taxes. Sorry, I'm a little fuddled with the words today. So in fact, I was doing this just the other day on Friday for a client. They've got summertime year end and we are putting all the numbers together. And so just on Friday, I just finalized all the numbers. They were a new client. They were using a different accountant the prior year. And so their income and expense numbers were relatively the same year to year. But last year, the combined tax bill between the personal and corporate was $16,000, just about $16,000. This year, the combined taxes are going to be about $8,000. So it's really, really important to have a tax professional that will work with you, that will help you understand these things, to help you understand the different tax ways, combinations of paying yourself to keep that tax bill as low as possible. So anyway, so you got off on a little tangent there. So by working with that tax professional, or even just on your own, having that income and expense tally throughout the year, this means that you won't have to borrow money, which no one wants to do right now with the sky-high interest rates, or be using your future earnings or your future cash flow to pay that current tax bill. since you'll have the cash ready and waiting when April 30th rolls around, because we proactively plan for it, we budget for it. I told you 6 months in advance that roughly this is what you're going to owe for the corporate and the personal, and so you're well prepared before April 30th rolls around. So now, if you actually find yourself in a situation where your overall taxes owing is greater than what you can manage, maybe because you were a few years behind in your tax filings and you just did a big catch up, you can ask CRA to make a payment arrangement. But the one thing that you should know is that these are usually just for the very short term, like a maximum of 6 months. Every once in a while, depending on your situation, you might be able to get a longer one, but usually the most CRA will give you is 6 months. So this is especially true for this next point. So us tax professionals, we often suggest that rather than having clients negotiate with CRA themselves to set up a payment arrangement, those clients should enlist their tax preparer or accountant or even a lawyer, depending on what the exact situation is, to work with CRA on their behalf. So having a professional representative, like us, like me, will usually be able to negotiate the same, if not better, payment arrangement terms, largely because us as the representative will limit what information that we tell CRA about your situation. You know, we all have a natural tendency to get into all the details and the who, what, where, when, if, and all of this. We will filter that to CRA and just give them the bare facts and work our best magic to create a payment arrangement that works for you. And then the second reason is that CRA recognizes that us as the representative, we don't have any skin in the game. We're not going to get all riled up when they come back and say no, or when they come back and say, no, that you got to pay X instead of Y. They know that we don't have any skin in the game, right? It's not affecting us personally as it would if you were on the phone with them. So they've, have a little bit of the power when the clients are on the phone with them, whereas we kind of eliminate some of that power because they're like, no, that's just not going to work, right? If the client has to do that, then they're gonna have to declare bankruptcy, right? There's no way they can make that payment work. So ultimately, having that tax professional work with you on your behalf with CRA, like I said, usually results in a better outcome for the taxpayer or the client. But it is critical to understand that if you do set up a payment arrangement, whether you do it yourself or your tax representative does it for you, you have to meet the requirements of whatever that arrangement is. If you fail to meet those requirements, even sometimes by missing the payment date, like the day you were supposed to make a payment by a day. So let's say you're supposed to make the payment on the 15th and you get paid on the 16th and you make the payment on the 16th. Technically, you're in default, and CRA can now take immediate action to garnish your wages or your bank accounts, among the other things that they can, ultimately do. So it's really, really important that if you fall into a situation like that, like I said, your payment's due on the 15th, but you get paid on the 16th, that you phone CRA and tell them, or have your representative phone CRA and tell them that, I'm aware there's a payment, but the, day I'm getting paid is the next day. I'm going to make the payment the next day. Is that okay? And as long as you do those sorts of things, generally speaking, you'll be in the good. It does happen every once in a while that, it falls the other way, but usually that's the case. And then finally, this goes for everything, not just if you've got a big tax bill. After you file your taxes and you receive your notice of assessment, it's crucial to make sure that your assessment is accurate, that it reflects the tax return as you tried to file it or as you filed it, so that all the deductions and the tax credits that you claimed have been accounted for. Oftentimes, especially early in the season, if you file within the first 3 weeks, February 20th to March 7th or so, the tax programs, there's still things that are being updated. We get updates almost daily into our professional tax programs. So there might be things that didn't get transmitted. I've seen it in the past. Things didn't get transmitted. We claimed X and Y got put in. So it's really, really critical to make sure that you check your notice of assessment against what you think you have filed, to make sure that all the deductions and tax credits and everything that you claimed have been accounted for. So that actually went a little longer than I thought it would, but I hope you enjoyed Tax Tips Tuesdays today with me, Christine Walters from All Inclusive Accountants. Please come back next week for another tip, and I hope you enjoy the rest of your week. And please feel free to, if you've got any questions, reach out with questions on this post, or feel free to DM me directly, and we will get back to you just as soon as we can. Have a great cold afternoon here